Toyota just had one of its advertisements struck down by the big ol' banhammer in the UK, and it's the biggest news surrounding the Toyota stock right now. So what was that all about, and how will this affect you as an investor? Keep watching for the next 10 minutes as we take you through all the latest Toyota news. But before we do that, subscribe to our channel, $1 World, for regular Toyota stock updates. Controversial advertisements for the Toyota Hilux sport utility vehicle, or SUV, that depicted the trucks being driven across natural landscapes have been prohibited by the UK's Advertising Standards Authority, or ASA, for promoting irresponsible off-roading regardless of environmental impact. The offending materials included a Facebook video and a poster advertisement displayed on bus stops. The 1-minute video featured numerous Hilux models driving in formation across an open plain flanked by mountains. It showed the convoy of vehicles splashing through a riverbed before joining a paved road. An authoritative male voiceover described the scene as one of nature's true spectacles, while on-screen text read Toyota Hilux, born to roam. The final shot centered on a Hilux parked in a rocky, natural setting. Similarly, the bus stop poster advertised the Hilux with the slogan "Born to Roam" alongside an image of two SUVs traversing a savanna-esque landscape. In the background, approximately 50 identical Toyota trucks were portrayed driving over the rugged terrain. The advocacy group Ad-Free Cities lodged an official complaint against Toyota to the ASA, arguing that the advertisements irresponsibly condoned environmentally harmful off-roading. In its defense, Toyota claimed the video was filmed with permission on private land in Slovenia using multiple Hilux trucks purely for dramatic effect. It contended that no reasonable viewer would interpret the ad as encouraging real-world off-road driving that could damage the countryside. Additionally, Toyota noted the poster background was entirely computer-generated imagery, or CGI, and involved no actual environmental impact. The ASA ultimately sided with the complaint, ruling that the video clearly depicted realistic vehicles speeding across untarmac natural environments like a riverbed. Both ads gave the impression of endorsing casual off-road driving without regard for environmental consequences. By seeming to promote the recreational use of SUVs in sensitive ecosystems, Toyota had failed in its social responsibility duties as an advertiser. Consequently, the ASA demanded the removal of the ads to prevent them from potentially influencing harmful consumer behaviors. In response to the ruling, Ad-Free Cities co-director Veronica Wignall explained SUV brands frequently misled customers by linking their products to ideals of rugged exploration and dominion over nature. The reality is growing SUV use actively damages natural habitats through pollution and contributes to pedestrian fatalities in urban areas. While the ASA decision was a positive step, merely regulating advertisements is insufficient. Wignall argued SUV promotion overall should cease in light of the vehicle class's disproportionate harms. A Toyota spokesperson reaffirmed the company does not condone environmental damage and has been an industry leader in reducing auto emissions for 30 years. They explained certain customer segments require legitimately rugged trucks capable of handling the harshest off-road conditions, such as remote work sites. The spokesperson reiterated that the Hilux video was filmed with permission on private land in a non-sensitive area, while the poster used 100% computer graphics. Still, Toyota accepted it must ensure future advertisements do not risk encouraging irresponsible behaviors towards nature. Expanding further, this incident illustrates the rising tensions between consumer choice, commercial interests, and environmental sustainability. On one side, automobile manufacturers wish to market their products to different lifestyle segments, including adventure-minded consumers attracted to the robust SUV category. Outdoorsy Hilux had synergized with buyer aspirations of confidence and freedom in natural spaces. Furthermore, advanced economies are built on consumer freedom of choice supported by the free enterprise in advertising. However, climate advocates counter that personal vehicle preference must be balanced against ecological impact. The scientific consensus is transportation represents close to a quarter of total carbon emissions driving climate change. Large SUVs disproportionately contribute to this pollution burden while providing little additional utility for most real-world trips. Environmentalists also argue casual depictions of off-road driving normalize the recreational disturbance of carbon sequestering natural habitats. Thus, sustainability-conscious stakeholders demand the societal right to curb commercial messages they consider environmentally destructive, like these Hilux promotions. In the middle, advertising regulators face the unenviable task of reconciling competing commercial freedoms, consumer sensitivities, and ecological concerns. The activist group clearly raised legitimate worries over Toyota's ads effectively glamorizing SUV adventures in pristine nature, yet banning commercial imagery risks setting a censorship precedent that hinders economic messaging. Automotive marketing intrinsically links positive emotions like excitement and empowerment to vehicle performance and durability. Excessively controlling portrayals of off-road driving could negatively impact a range of brands and sectors. Instead, A more moderate approach may involve proactively working with industry to develop voluntary codes of conduct around environmental advertising claims. In conclusion, this Toyota Hilux case foreshadows the emerging societal debates surrounding eco-conscious consumption and the automobile industry's responsibility to support sustainable transport systems. Achieving mass adoption of zero-emissions vehicles while meeting diverse consumer demands will require innovative policies that balance ecological values with economic realities. Regulators, manufacturers, advocacy groups, and the wider public all have roles to play in building fair compromises without resorting to knee-jerk overcorrections on any side. Enjoying the video so far? Be sure to join our Discord community to connect with other like-minded investors. Talking more about the Toyota stock, Toyota Motor Corporation trades on the New York Stock Exchange with shares currently priced at $181.51 as of November 22, 2023. Toyota's stock price has ranged between $132.35 and $195.65 over the past 52 weeks, with 1.63 billion total shares outstanding and a public float of 1.35 billion. Toyota Motor Corp sports a sizable market capitalization of $253.88 billion. Toyota generates strong financials, bringing in revenue per employee of $794,050. The company's profitability is also robust with a price-to-earnings ratio of 8.97 and earnings per share of $20.42. In addition to growth prospects, Toyota offers shareholders an attractive dividend yield of 2.06%. The company last paid out a dividend of $2.50 on March 30th and has an ex-dividend date for its next dividend schedule for the same date in 2023. In terms of analyst sentiment, Goldman Sachs has a buy rating on Toyota's stock as of November 22nd, citing the company's leading electric vehicle technology and resilient supply chains. On the other hand, Bank of America has a sell rating on TM shares as of November 19th due to macroeconomic headwinds facing the auto sector. Looking at the stock's technicals, Toyota trades above both its 50-day and 200-day simple moving averages, indicating a bullish trend across multiple timeframes. The company also has relatively low short interest at just 0.07% of its public float, giving it less susceptibility to a short squeeze. With average daily trading volume of 310,560 shares, Toyota sees solid liquidity enabling traders to enter and exit positions with ease. In summary, Toyota Motor Corporation represents a globally diversified auto manufacturer with financial strength, an attractive dividend, and technical momentum. However, analysts remain divided over whether macro challenges or company-specific advantages will drive near-term stock performance. Investors should view Toyota as a quality company facing some sector headwinds in 2023 but with strong long-term fundamentals underlying its business. Talking more about recent news, Toyota finds itself entangled in a legal saga. Accused of illicitly obstructing car buyers from canceling add-ons to their loans, Toyota faces the repercussions of a regulatory storm. The cinematic narrative unfolds against the backdrop of a $60 million settlement, a fine crafted by the U.S. regulatory authority, the Consumer Financial Protection Bureau or CFPB. In this legal screenplay, Toyota Motor Credit, the financing arm of the automaker, plays a central role, tasked with providing vehicle financing to eager customers acquiring Toyota vehicles from dealerships. The plot thickens with the introduction of add-on products, priced between $700 and $2,500 per loan. These add-ons promise a shield for buyers, guarding against the perils of vehicle damage, theft, warranty expiration, and unforeseen events like death or disability. The climax, as narrated by the CFPB, reveals a chorus of disgruntled borrowers. Their lamentations tell a tale of dealers wielding misinformation like a deceptive script, hurrying them through paperwork until the cost of the add-ons remained shrouded in mystery. The consequences were dire. Unwitting borrowers faced inflated monthly payments, and their credit reports bore the scars of financial opacity. As the regulatory plot thickens, the CFPB accuses Toyota Motor Credit of making the cancellation of these bundled products akin to navigating a labyrinth. Over 118,000 borrowers drawn into this financial drama were redirected to a hotline where agents, directed to dissuade cancellations, often failed to orchestrate the much-needed refunds. The subplot involves an alleged violation of the Fair Credit Reporting Act, with Toyota Motor Credit standing accused of providing misleading information to credit reporting agencies. The fallout impacted more than 27,500 borrowers, as the company allegedly turned a blind eye to rectifying the misinformation. In a climactic resolution, a consent order emerges, painting a path towards redemption for Toyota Motor Credit. The company pledges to simplify the cancellation process for unwanted product bundles, presenting a metaphorical olive branch to the aggrieved borrowers. Additionally, A vigilant watch is cast over dealership conduct, with a commitment to ensuring that employee compensation and performance metrics remain untethered from the sales of these contentious bundles. Toyota Motor Credit, taking center stage in the post-scandal denouement, issues a statement. It resonates with the echoes of a redemption arc, expressing unwavering commitment to taking righteous action for the benefit of its customers. The company, it claims, strives to harmonize with federal and state laws, promising a denouement that reflects the values of transparency and adherence to regulatory harmony. Remember that this is not financial advice, and you should always do your own research and make informed investment decisions. That was all for today. Let us know if you think this stock will make you rich or not in the comments section. Hit like and subscribe to our channel $1 World for more such penny stock videos, and we will see you in the next one.